That's 424,900 troy ounces of gold times 4,200. You're like, what, 1.6 billion or something? And 17,980,000 ounces of silver in 3 days. Wow. 18 million ounces of silver. This is all you need to know. That's it. The biggest money in the world is right here saying, yeah, bring it in, 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 bring it in. Forget about the noise. Don't be distracted by the noise. It's going to be volatile like a heart monitor because of the January effect, because of the rebalancing, because of the shorts that are trapped, because of all of this and the systemic contagion nature. And if it's true what we're hearing about the JP Morgan letter that just came out and the Morgan Stanley letter, which both would make sense to me.
We should talk about that.
We will.
Yeah.
We will. But, and let's get some questions.
Yeah.
That's all you need to see.
I just want to.
Biggest money in the world doesn't do this for shits and giggles.
And by the way, little by little, and then all at once, silver has become the third largest asset in terms of market cap. It's like that.
That's why I like the little by little. If the U.S. banks are net long, first of all, he came out the other day and said Morgan Stanley had leaked a memorandum telling all of their institutional traders to close out all silver positions by the end of the month. All of them.
Both long and short.
Yes.
Okay.
Get out. Now, I don't know how I feel about that one, but there is one today, and he says it's validated and verified. Now, I can't verify it, but he said, JP Morgan says, exit your positions by January 31st. After that, we will no longer allow delivery. We will only go to allocated cash settlement. So they've always had an allocated model of cash settlement. They also have segregated, where they would allow for physical delivery. Now, I guess that would also be the COMEX contracts. They're basically saying get out of all your positions because JP Morgan will not allow physical delivery after January 31. Now, is this true? I don't know.
Andy Schectman warns silver is at a breaking point. Record deliveries, 62.875 million ounces December, 18 million ounces January, show big money buying physical silver. Banks are now cannibalizing each other after 50 years, with 8 Western banks suppressing prices. China controls 70% of refining. Silver will soon be impossible to source. Thanks for watching. Give a thumbs up and subscribe to Find Metals for the latest insights.
Right now, but here's the point. These banks acted in concert together, and if Tom is right, and the administration is setting up the European banks to blow up, to get back at the European aristocrats that he thinks is behind all the trouble that led up to this last election. This is interesting. And it says that Deutsche Bank gave up the other day. It says Deutsche Bank issued 654 contracts to 2 banks. And physical, they had to give up the physical, which they don't like to do ever. They gave up 654 contracts, which is 3.27 million ounces. And let's see, that's actually more than that. I'm sorry. They gave away 884 contracts, 2.26 million ounces to JP Morgan, to a client's account, to not their house account, to a client. So they're doing it on behalf of someone else. And 432 contracts, which is 2.16 million ounces, to Citigroup's house account. So the bottom line with all this is that when the smartest, best connected institutions in the silver market are choosing to hold physical themselves rather than trust future availability, it is a very, 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 very big deal. Citigroup is taking house silver. JP Morgan is facilitating large customer demand for physical silver. But the bottom line is that the institutions closest to the metal are now prioritizing control over deliverable silver, or of deliverable silver, instead of future promises. And when they're taking it from their cohorts in the last 50 years of suppressing the price, in essence, they're cannibalizing each other right now. They're breaking ranks, is what it looks like. And I think it's a very big deal. To your point, Citibank is on the other end of that, trying to clean up their act, maybe. These are the big institutional banks and traders that say, these guys think they're so smart, they can't play in this sandbox. Their checkbook's not big enough. So let's just squeeze them with raising the margins. Maybe we'll short the price, drive it down a little bit, and they will force liquidate, which it did. And you saw that. And you have the big boys and girls sitting there with their hands wide open like this saying, thank you very much. I will stand for delivery. I'll take all of that on the cheap. But I want to make an analogy. I went to lunch last week, as you know, with an owner of one of the Major League Baseball teams. Very, very wealthy man, happens to live within 1 or 2 houses from both Alicia Keys and Mark Wahlberg. And this neighborhood, the houses start at $30 million. Now, do you think that these people care what mortgage rates are? They have no inclination to ever use a mortgage when they're spending $40 or $50 million on a home. They just pay for it in cash. Well, it's the same thing here, right? In some of the other neighborhoods, raising the mortgage rates will kill the real estate property because so many people are reliant on a mortgage to buy a home. But at a level where it's cash, at that level where you're talking sovereign nations, where you're talking Tesla and Samsung and Sony, and you're talking the photovoltaic solar panel makers. So you're talking big, big, big money. They don't care about margin. So when the price gets hammered by the smaller people that are on margin, you have these guys sitting right here. And what do you know? Silver's climbing back up again. And this is what we would expect to see, I think, in this market where they are shaking the bushes, pulling out all of the weak hands or those on leverage, but nothing's changed. Nothing at all. At the same time, before we get into questions, let's just talk about what's happening right now. You have what's called the January effect, where you have hedge funds that need to redeploy money. So we would expect that to be very bullish. Anytime the West tries to step on the price, you have Asia sitting there saying, thank you very much, I will buy it. They're buying. There's a what's called an arbitrage spread right now between the US and China, where China's price is substantially higher than it is here. So you get the traders say, well, geez, if I were to buy it here and sell it there, the physical, buy the paper here, sell the physical there, I'll make a lot of money. And they do. That physical never comes back, by the way. You know, would the equity market be where it is if the Fed didn't pump in from 2008 when their balance sheet was 800 million or 900 million to 9 trillion, all of it in treasuries to suppress interest rates and mortgage-backed securities to create an illusion of strength in the real estate market? No, it wouldn't. And so has it had its run? Well, why have 8 Western banks suppressed silver to the degree of it being the largest concentrated short position of any commodity ever traded in the history of the COMEX market? Why? And why was there the London gold pool? And why do banks continue to suppress gold? Because they wanted gold was because of Gibson's paradox, the environment where you suppress interest rates to create an illusion of prosperity through your 401k and your equity index going higher in a suppressed interest rate environment, and your bond portfolio going higher, you're a bond guy, Barry, in a suppressed interest rate environment. Well, you need to kill the canary in the gold mine, that's gold. You take that out of the equation, it's breaking now, because what no one has ever done to the West is stand for delivery, and that is breaking the game.
Yeah.
Period. And so when we say it's had its run, no, it's just getting warmed up because it's going to be allowed. It's a beach ball underwater. You move your hand for 1 second, it takes your chin off, and that is where we are going, because it's never been allowed to find its real price discovery, because the West, who has ruled the roost for hundreds of years, has had to maintain an illusion of supremacy through suppressed interest rates to make asset prices go higher when you offshore your manufacturing. You look at Silver Eagles. There's no one in the country really with any substantive amount other than 2026s, and those are selling out fast. All of the stuff I've warned about is happening. And at this point of the game, I have no interest in being anything but completely forthright and truthful. I'm not going to get in front of millions of people over time on these podcasts and say anything to talk my book. I will tell you, I've seen it over and over and over again where product disappears, never in an environment quite like this. And then you add into it states like Florida and Texas who have passed precious metal legal tender laws. You have constituents in these states that are very wealthy that are waking up. And this market will be defined in two ways: by your friends out there who don't own any. They'll say, damn, I should have listened to you and it's too expensive to buy now. But to all of you who want to buy more, you'll say, damn, it's hard to get and the delivery delays suck and the premiums are high. And boy, you know, that's what's going to happen because it's the pimple on the elephant's ass, the amount of gold and silver that is out there. The elephant has no idea. Wait till the elephant turns around and says, oh, well, you need some too. It's gone. It'll be gone. Like that. I know that triggers you, Jana, but I'm sorry. It will be gone. There just isn't enough. And that's my old friend Rick Rule always says, that the amount of gold and silver owned by the public, including equities, from Joe and Jane Sixpack to the Harvard Endowment Fund, who, by the way, did just buy a few $100 million in gold and silver, the Harvard Endowment Fund, is less than 0.5% in terms of allocations. And it's already this hard to get. Wait, just wait. And I say that to you because there will also come a point where folks in Australia will say, what the hell are you selling and sending our silver and gold to North America for? And the UK will say the same thing. And so too will South Africa. And so too will Canada. And everyone will start to prioritize either nationalization for their own sake or for their own people. And so, yeah, I've been begging people to buy stuff while premiums were cheap. And you know, people who make money like Rick Rule will tell you the most money he ever made was buying stuff that was wickedly undervalued and nobody wanted. Well, what did nobody want? Well, what's been the best performing asset? How many people told me that I was a fool in the comments for recommending silver when it wouldn't get above $25 an ounce? And where are they now?
Explain that.
So during the pandemic, the premiums on Silver Eagles were $12, $13, $14 over spot, which means I was buying them for 9, 10, 11, 12 over spot. And
hold on. I got to just correct you on that. Premiums got to be almost $20 on the Eagles. We were paying 16.
Okay, well, whatever. So let's say the premium is $20. What that means is the mint the U.S. Mint doesn't change what they sell their Eagles for. They sell them to the primary distributors for, I don't know, $2, $3 over the price of silver. And then that's it. They run out of product, right? And we can use buffaloes as an example. I mean, they ran out of gold buffaloes early this year, and they didn't make any more. And so now you have 4 or 5 or 6 primary U.S. Mint distributors that are sitting on this stuff, and they have everyone asking them for them, and the Mint doesn't have any more. So now they make the market, and they say, well, I'll tell you what, I got people begging me and willing to pay $20 over spot for it, but I'll tell you what, I'll buy it back from you for 18 over spot or 17 over spot. A larger spread, because you cannot hedge that. So let me explain what that really means. If I have 10,000 of those coins in stock, I can hedge the 10,000 ounces of silver. I cannot hedge the in essence, 200,000 in premium, because it's $20 over on 10,000 coins. I can't hedge that. There is no vehicle that allows me to hedge that. So this is how you go out of business as a company like mine. And a lot of people suffered in this industry at the end of 2020. When I think it was 24, when the banks failed. Was that 3 or 4? 23. When the banks failed, all of a sudden, the U.S. Mint, after getting so much shit from everyone saying, why is it easier to buy kangaroos from Australia or maple leafs from Canada or South African Kruger hens than it is U.S. Eagles? And I would implore everybody to go to Road to Ruta, Big Squeer's YouTube channel, and listen to the 3-part interview that he did back then with Jack Sermon, who started the Silver Eagle program. And Jack said, you know, back then, I was told by my supervisor, and that would have been Janet Yellen, the head of the U.S. Mint, or the Treasury Secretary, to only make as few Silver Eagles as possible without creating a global backlash. Well, he got a global backlash. He said this. He said, yeah, it really made me angry because I'd been there since day one, since 1986, and they told me to do this.